Ever looked at a business purchase and thought, wait, can I write this off? Well, let me tell you, you're not alone. If something helps you run your business, then there's a good chance it is deductible. But most new business owners either don't know what counts or miss easy deductions. By the end of this video, you'll know exactly how to tell what's deductible and what's not so you don't leave money on the table. And to make it easy, I've got a free tax deduction checklist just for you. So stick around and grab it. My name is Chika, and I've been a CPA for over 15 years, helping business owners start and grow their business to maximize their tax savings with confidence, clarity, and ease. Too many new entrepreneurs overcomplicate deductions or don't track them at all. The simple rule is if you bought it for business or it helps you make money, there's a good chance you can deduct it. For example, your laptop, that's deductible. That business course that you took, deductible. Your Canva subscription, that's deductible as well. The key takeaway, stop second guessing every little expense and just track it. Just keep track of it, okay? Spend it, keep track of it. Some of the things you already pay for might actually qualify as a business expense. So some common everyday expenses that could be deducted, whether it's fully deductible or partially deductible, includes Wi-Fi, your telephone bill, your cell phone bill, the coffee shop meetings that you have with your team or with potential clients, deductible, or even your car. If you drive your car for business reasons, there's a chance that it's deductible. And if you work from home, you have a whole home office setup, there's some deductions included in that. Okay. Let's use the example of your cell phone. You have one cell phone, and of course, that means there's going to be some personal usage as well as some business usage. So if you use your cell phone 50% for business reasons, then 50% of your bill is a tax deduction against your business. If you're unsure whether something counts as a deduction, then don't stress, just track it. Just track it. Just keep track of it. You don't need to know if it's deductible or not in the moment. But if you spend the money, just track it. Let me show you some simple ways that you can track your expenses. So for one, keep your digital copies of receipts. Keep those receipts. Some simple ways to track your expenses includes keep digital copies of receipts. You can keep your receipts whether it's with a Google Drive, create a folder in Google Drive, and all your receipts get saved in that folder. Or if you're using a software such as QuickBooks or Wave, they have their method of keeping track of your receipts. So that makes it really, really easy. The second thing you want to do, now that you have your receipts, you also want to have a way to have a report of showing the totals or the summary of your expenses. So if you're not using a software, you can use a spreadsheet. Think about a Google spreadsheet. And with the spreadsheet, if you're creating it from scratch, just think it should have 5 different columns for tracking your business expenses. So column 1 would be the date. So the date in which you made the purchase. Then you need the expense type. So for instance, a laptop. And the third thing you want is the amount. That's the third column. How much did you pay for that laptop? The fourth column is the category. So for instance, the category of expense for a laptop would be equipment or computers. And then lastly, the fifth column of your spreadsheet would be business purpose. And usually by business purpose usually mean the question, is it for business purposes? And the laptop is yes, right? So in that column, yes, no. But there might be some other expenses where it's not a full business deduction. Again, let's use the example of the telephone. So in the business purpose column for a phone, you would put the percentage of how much business use. And generally with a phone, we can get away with 50%, like 50-50 business, and then the remaining 50% is personal. So that's what you would put in the business purpose column. And let me just mention one thing as we talk about business versus personal. Generally, rule of thumb is to keep business separate from personal. Ideally, you want to have a business bank account that has a debit card. Potentially also you have a business credit card. If you're purchasing business items, you're using the business card for business. But every now and then, there's going to be times where maybe you use your personal card for something that should really be business. Again, the same example of the cell phone. Maybe it's always been linked to your personal, although 50% of the monthly bill for business reasons, right? So in that case, again, we would just mention in the business purposes. And then when it comes time to filing the tax return, we would make sure that we only deduct 50% of the total cost for that year for the phone. It's that simple. And when it comes to tracking, your future self is going to thank you, especially when tax filing season comes along. The fact that you have kept all your receipts, that you have tracked, and you have a summary of the total expenses by category for each of the items that you've purchased. Wow, it's going to give you peace of mind. Your accountant is going to love you because you have kept a summary of your expenses, your income, things like that. So there you have it. Now you know what's deductible. Let's make sure you don't miss a thing. Here's your bonus. I created a free tax deduction checklist just for you. This checklist breaks down everything you should be tracking so you don't leave money on the table. All you have to do is click the link in the description to grab your checklist today. Tell me in the comments, what is one expense you thought wasn't deductible but actually is? I want to know. So put it in the comments below. Don't forget to like the video and subscribe to my channel for more business tax tips to help keep more money in your pocket. And let's be real, less money to the IRS. All right. Until next time, see you.